Buddy, welcome back to Young Bull Finance. Today, I'm going to be talking about another REIT, New Residential Investment, or NRZ. So, let's get started. First of all, I'd like to look at what's going on with their stock price here. So, before the crash, it was trading at around $14 to $15 per share for the last 5 years. So, that's pretty normal for a company like this. NRZ is You don't buy NRZ for growth of the asset, you buy NRZ for the dividend, which we'll get into in a minute. So after the crash, it dropped down to $3 a share, which was 80% of the total value, and that's a very scary drop. A lot of people were very worried that this company wasn't going to be able to come out of this recession, and some people still believe that. But it's been slowly climbing back up. It's still only about 50% of what it used to be. The dividend yield right now is 2.86%. It's low right now because they recently just cut their dividend, and I think they cut their dividend down to 10% of what it used to be. Typically, the dividend yield for NRZ has been about 15, anywhere between 12 and 15, and that's a really high yield. So NRZ, in my opinion, is a very hard and complicated company to understand, but essentially what they do is they buy or acquire things like mortgage-backed securities, mortgage servicing right, and other sort of real estate assets that diversify their portfolio. Like I said, I won't get too far deep into it. It's a very hard, complicated thing to understand. It was hard for me to understand, and I don't even know how to simplify it for a YouTube video. So if you're not comfortable with a company you don't really understand, I wouldn't even consider buying this anyways. But if you're just looking for something that pays a high dividend and hopefully you can get at a low cost during this market crash, this might be something you want to look at. All right, let's look at the balance sheet. So through 2015 to 2019, every single year they were raising their revenues by a lot. However, past 12 months, they're actually in the red right now, which is concerning. This is why a lot of people are concerned for this company. If we look at their operating income, it goes up every single year except a little dip in 2019 there, and then the past 12 months they are in the negative again. So what this means is the cost for them to operate is costing more money than they're earning in revenue right now. That's a very concerning thing. Now, it's not a death sentence. This kind of puts people in two different camps. You got people that want to take a risk and say that they're going to recover, and then you got people that are selling out and either they think they're going to fail or they don't even want to be worried about it. Now, let's take a look at dividends. They have an interesting looking dividend history here, and they haven't really been around for a whole lot of time. So they've only existed during a market boom. So this is their first hard times as a company, and they had to cut their dividend to about 10% of what it used to be. They used to pay a 50-cent dividend, which for a stock that costs $15, that's a lot of money. Just an example, Microsoft pays a 51-cent dividend right now, and their stock price is usually around $150. So their dividend yield is a lot higher, and that's why people buy this company, is to just get the dividend. Say they want more dividend money to just fund their portfolio. It's a big risk though. This is why this is a risk, because during a uncertain time like this, they will definitely suffer, as you see right now. And we look at their dividend scorecard. Usually their payout ratio is above 90%. Right now it's only 14%. So basically they're not paying out their revenue right now. They're saving it, or they're using it to keep the company afloat, which is a good sign. You don't want the company to be paying out a massive dividend when they need money. You want the company to succeed in the long run, and sometimes you have to give up your dividend payment. I'm going to look at the conversations tab for NRZ on the Yahoo Finance page, and typically, take these with a grain of salt. They don't really mean anything, anybody could come comment on, but stock price a lot of times is measured on reactions of the market and how people own it, and it is kind of important to know. You don't have to agree with them, but it is important to know what the general consensus of what people are saying. And people generally are pretty bullish on here. People commenting on here really think NRZ is going to be fine. Anyways, that's a quick look of NRZ and how they're going to kind of deal with the situation at hand. Couple cliff notes is they are having some trouble with money right now. Stock price has dropped a lot and they're rising. Generally, people from online forums say they think they're going to be fine, but like I said, take that with a grain of salt. My personal thoughts are I'm going to hold them. I'm on a gain with them right now because I bought a bunch of NRZ when it was around $5. I'm actually up on it, so I could sell for profit right now. I don't necessarily want to do that because I care about dividends. It's a big risk staying with this company or buying this company. Don't get me wrong. I'm not saying my decision is a very good one. I'm just going to hold on to it because I just feel like being risky, and I'm not telling you to buy this. I don't necessarily recommend it if you're not risky. Anyways, thank you guys for watching. Please like the video, comment, tell me what your opinions on NRZ, and please subscribe to my channel. Thank you.